I guess we can get started now. We have a bunch of people in. So by way of introduction, we're all from PolicyMe. My name is Krishi. I'll be your host today. I'm from the growth team, and we have two really amazing and very knowledgeable panelists. We have Laura and Tobin. So they'll be here to walk us through everything life insurance and answer your questions. And I'm just going to pass it over to them now for their own little introductions. Laura, do you want to start?
Sure. Hi, everyone. Thanks for joining us today. My name is Laura McKay. I am the co-founder and COO of PolicyMe. Started the company with two other co-founders a little more than 3 years ago now. Really have had an extremely fun time building a new type of life insurance company, one that's more affordable and simpler for all Canadians. We have an incredible team here, and one of those folks is Tobin, who had joined us from the very early days as one of our first life insurance advisors, helping our clients with any questions they have. So I'm excited to be here with him. We've worked side by side for many years, and excited to kind of talk to you guys about life insurance today.
Awesome. Thank you, Laura. And Tobin, do you also want to do a quick intro?
Sure. Thanks, Krishi. Thanks, Laura. My name's Tobin Tuff, and I've been an advisor. I got into the industry in the end of 2013, and I've worked for some of the big companies around. And my family itself was the beneficiary of a life insurance policy, and I've seen firsthand how much it can change people's lives. And so I've been in this industry trying to make advice easily accessible for everybody. And I'm so happy to be a part of this company where I get to do that every day.
Thank you for the intro. And I kind of went over our little schedule earlier, but I'll go over it again. So right now, we're just going to dive into life insurance, the general bits of life insurance. And then after that, we'll go into specific life insurance topics, get into the technical details. And one of our goals here at PolicyMe is to make sure that all Canadians are educated and have the knowledgeable information they need to make an informed decision on a good life insurance policy. So that's really what this session is about. So let's just kick it off with the very general question. Laura, do you mind telling us, what exactly is life insurance and why is it important?
Yeah, of course. Life insurance is a security blanket. It's there in case the worst scenario happens, which is that you pass away and leave any loved ones who are financially dependent on you without your income anymore to support their daily expenses, their weekly expenses. Practically, it acts as a bit of a promise between you and an insurance company. On your end, you're paying that insurance company a monthly premium. This could be kind of $30 or $40 a month. And in return, that insurance company is making a promise to you and saying, if you pass away, we'll pay your loved ones, which are your named beneficiaries on your life insurance policy, a lump sum, and it'll be there for them to kind of use to cover their expenses. This lump sum is paid tax-free to your loved ones. It's pretty much a really simple contract between you and an insurance company. It's important for kind of the obvious reason that you can think of, and it's if you pass away before you expect to, and you have loved ones who are dependent on your income, they could be left in like a pretty tough situation if you're no longer there to support them financially.
I kind of want to dive into this analogy that you used. I thought it was super relevant, that life insurance is like a security blanket. So I guess just to follow that analogy, how do you know how big a blanket you need? How do you know how much coverage you in your personal situation should be getting?
Yeah, so I mean, it's actually not the easiest thing for any kind of Canadian to know. It's a pretty complex calculation, and this is a little bit of a plug for PolicyMe because we do have a free tool that allows you to put in some information about you, your family, your financial dependence, as well as your financial situation, and we'll give you a recommendation on what coverage amount and policy length is right for you. Generally, when you're at the highest level, you're looking at making sure that your loved ones, anyone who's financially dependent on you, is able to cover their expenses. So this could be like rent or a mortgage payment, or kind of the, like education costs, things like that, for the rest of their lives. And that's the calculation that we're looking to do for you on PolicyMe.com. We also look to pay off any outstanding debts. That's something that's pretty common in the life insurance world. If you don't want to leave your loved ones with any large debts, so that's something that goes into our calculation as well. This is like your needs. It's offset by any sources of income that your family already has. So that could be any savings they have, or if you have a partner who is bringing in an income, we take that into as account as well and say your needs versus your haves, and that's kind of what's left. That's a gap, and that's the life insurance gap, and that's how we build our recommendation for you.
Thanks, Laura. I think that was pretty comprehensive. So you kind of know what your needs are and exactly how much coverage or for how long you need life insurance. Okay, so now let's say I decided that I need life insurance. Are there different types of life insurance? How do I know which one's right for me? Tobin, do you want to offer your perspective there?
Sure, I'd be happy to. So when you're talking about life insurance, there's two main kinds. You have term insurance, and then you have permanent insurance. You may have heard terms such as whole life or universal life. Those are types of permanent insurance. So in a nutshell, term insurance lasts for a certain amount of time, and then the policy ends once the term length ends. Permanent policies stay the same price and last your whole life, and they'll pay out whenever it is that you do pass away. And the difference between them is one costs a lot more. To guarantee it for your whole life costs a whole lot more than the chances you're going to die in a given time frame. So how do you know which one is best for you? With term insurance, we use it mainly for risks that you would call it, you expect to go away one day. So for example, if you think of kids or a mortgage, one day you hope to pay off that mortgage. One day you hope your kids are going to be old enough and have their own source of income and don't really need your money anymore if you pass away. These all have a sort of timer on them. So one day you don't really need the insurance anymore. You don't need that $1,000,000 or $500,000 that you once needed when you had a baby and a huge mortgage. So to make it the best way through financially and not overpay, term insurance is the smartest way to go for any risks that you're going to outlive one day. Now, if you think of risks that you won't outlive, there's only a couple really, and you can think of death and taxes. So it's going to cost something for final expenses for that funeral. And as well, you may have an expected tax liability that you think somebody's going to need to pay off when you pass away. So those are things that term insurance wouldn't be good for because it's going to expire one day. And if you're worried about your funeral cost, then permanent insurance is the only thing that's going to cover that worry. The only reason we would ever suggest not to get it is one often not cited reason is inflation. For example, if you're younger, if you're in your 30s, you're in your 40s, and you're thinking of getting permanent life insurance, you're thinking, well, let's get $25,000 to cover the funeral, the final expenses. By the time you actually reach life expectancy, that's not going to be worth near the same amount of money. I've used to see lots of policies from the 70s, the 60s for $1,000 to $5,000 paying out. And that was a lot of money back then. That's what covered a funeral final expense. So if you have time to plan, you'll get much further by investing that money instead. So we only really recommend permanent insurance if it's too late to plan, or if you're one of the very few people who have a unique situation where it could come into play. In all other cases, term insurance is really the most financially smart way to go in our experience. So in a nutshell, term lasts for a certain period of time, much more affordable. You can get much higher amounts. Permanent insurance lasts forever, is until the point you pass away. It's much, much more expensive, and prices never change.
Okay, awesome, Tobin. Yeah, I really like at the end how you just like analyze the differences and the pros and cons of both term and permanent. So I think that's very helpful to know in a nutshell. And then another question for you is, I think this is really relevant to the situation we're in right now. COVID-19, how does the pandemic, how does COVID-19 affect life insurance, if at all?
So that's a great question. So right now, COVID has had not any impact on any existing policies. If you have a policy and it's in place, there's no worries there. If you pass away for any reason, that policy pays out, COVID or not. And that still extends to new policies. If you're approved for all causes of death. And so that hasn't changed yet. So every life insurance company is a little bit different. But in our experience, that's the main way things have changed with the pandemic, is they're being a bit more careful when actually approving applications. But once you have an approved application, all causes of death are covered. There's no worry with COVIDs, vaccinations, all of that stuff. Everything's covered.
Yeah, thanks, Tobin. I think that was like a question that's been at the forefront of everyone's mind. So great to get that out of the way. Okay, so let's dive into life insurance a little more specifically. Like, okay, I decided that I want to get life insurance and I know how much coverage I need and for how long I want to get it. So like, how do I start that process? Like, do I look online to buy? Do I go with an advisor? How long does that process take? I don't know if you want to give a high level overview, Tobin.
Sure. So if you already know what you want to get and you're just looking for life insurance, you know you need it. One important thing to know is that whether you're getting a policy through Manulife, Sun Life, any of these big names or us, they're all going to be the same, whether you got them through a person or online. It's going to be the same policy and it's going to be the same price. Nobody can save you or give you discounts on the same policy from the same insurance company. So it's going to be the same thing in the end. So it really comes down to personal preference of would you rather sit down with somebody, have a thorough meeting with a salesperson and go through that and have that one point of contact? Or do you know what you want and you just want to get it? And you want to do it in the comfort of your own home on your time, whenever you're ready, without speaking with somebody. Most of online companies, including ourselves, have licensed advisors who are willing to answer any questions, but you have the option of doing the whole thing by yourself. You can just apply. You can even possibly be approved that day, get coverage in place that same day, which is just not an option with a personalized advisor. In Canada, at least, everybody is commissioned. So there's always that extra level of they get paid more if you buy more. And not that that is affecting most people, but that is a temptation that exists. So you have to trust your advisor. So you have to make sure that the person you work with, you trust, and that you want to get advice from them. And so that's what I would say for any recommendation of what should you do. Think about what you would prefer to do. If you would actually like to sit down with somebody and have a deep conversation and form that with one single advisor, or would you like the convenience of being able to apply whenever you like, call in whenever you like, and be serviced by a team of professionals who are all salaried and just paid to answer your questions as unbiased as possible?
When you apply, you said, if you apply online, like let's say with PolicyMe, you can get approved and covered like that same day. But I know like with the traditional process, that may not always be the case. So I was wondering, Laura, if you could jump in here, like what does the application process look like? Like what's the timeline? What are the steps? And is it the same? Is it different depending on which company you choose?
This has been a big focus of ours at PolicyMe the last little while. We know that our customers are new homeowners, they're young parents, they're busy, and they don't really have weeks and weeks to wait for a life insurance policy. And this has been like the frustration that we faced when we kind of originally started the company as a brokerage business where we sold products that already existed in the market, for example, kind of like BMO's products, for example, and other insurance companies. In the old world, the process involves first filling out and signing an application. Often that's supplemented. That application is just kind of some information about you, your address, kind of who your beneficiaries are, but doesn't go into the nitty and gritty of kind of the questions that insurance companies need to underwrite your application. And so they use a process called a telephone interview where you get on the phone with a healthcare professional in some cases who will go through a number of questions about your lifestyle and your health history. Lifestyle being kind of whether you have any dangerous hobbies, whether you've had any recent motor vehicle accidents, whether you have any travel plans outside of Canada, the US, or Europe. They'll collect all that information that will go in back to the insurance company. You'll have typically a human underwriter review your applications as well as your answers to the telephone interview. At that point, they'll look at the application, decide whether that's enough to make a final decision for you or whether they need other requirements. These can be in the form of a motor vehicle report or kind of perhaps they'll ask for your medical records. Then the waiting game continues because we need to, as the insurance company, your underwriter, your broker, get involved with trying to access those requirements for you. Once those are completed, they go back to your insurance company. They review that again with your answers to those medical questions. And at that point, it's likely they're ready to make a final decision for you. Your policy can be approved. That right there is anywhere between 2 and 10 weeks, I would say. At the end of this process, you need to get your policy delivered to you. There's very few companies in the market who do e-delivery, so we're still relying on paper policy delivery. You need to sign that policy, send it back, and it's not until they receive that signed policy contract back with your first premium that your policy would go into effect. So if you add all that up, you can imagine that this process for some people can be extremely long and extremely frustrating. The people that our hearts go out to be honest, is not always even just the approved people. It's people who get declined at the end of the process because they've just gone through a 10-week waiting game just to find out they're declined, and they want to now have to restart and look back at the market to see what policies they may be eligible for. So it's a very tough process. We spent the last, I would say almost year kind of looking at that and saying, where can we bring in technology to improve and speed up and make this a little bit easier for our customers? So what we've done and launched in the last 2 months is an online life insurance product. You can go answer all those lifestyle medical questions on our website and get an instant decision. Instant decision doesn't always mean an approval or decline. It is an approval or decline for a big majority of our customers. There are some where they will still be referred to an underwriter and may need some additional requirements in order to get approved, similar to the old process where you need a motor vehicle report or a doctor's note. But in that case, we really have been focused on like the operational kind of process of requesting these requirements, getting them quickly for you, and getting that decision as soon as they come back. We'll get it in front of an underwriter. You'll be prioritized in the queue and you'll be getting a decision immediately. Another thing we've improved is kind of that delivery process. So you can actually accept your coverage, pay for your first premium, all online on our website. So that process doesn't take weeks, doesn't involve like mailings back and forth. You can do that pretty much instantaneously once you get your approval. So yeah, that's kind of the exciting place that we're at. We're constantly looking at making that process even better and faster and getting more people through the process with an instant decision. But right now we're pretty proud of kind of what we've built so far.
Thanks, Laura. Yeah, so just to summarize, if you go on our website at PolicyMe and you fill out our application, it will take you maybe 15 to 20 minutes. And like Laura said, you'll most likely get your decision instantaneously, whether that's an approved or decline. For a few of our cases, you might be referred and you might have additional requirements to complete, but even that'll take like maybe a week or two. It's nowhere near like the 8 to 10 weeks that you'd get with the traditional, if you go the traditional route. Okay, so kind of shifting gears a little bit, I've seen online that there's all these policies or life insurance providers asking about or like advertising no medical insurance. I don't know if you want to take that, Laura or Tobin, like what is no medical insurance? Should I buy no medical insurance? Is that a good idea for me?
I'll take this one. So for no medical life insurance, it is a useful thing, but it's definitely not the first thing you want to be looking at. So the main difference is that with fully underwritten term insurance, you have to do some medical tests, possibly, but at very least, you have to answer a lot of medical questions and be underwritten. So actually like approved and possibly have to go for more tests to be approved. And you get a good rate for that. And it's the most guaranteed type of insurance you can get in Canada, but not everybody qualifies for it. So if you don't qualify for the lowest price, the best rates, it may be worth it to look at non-medical insurance. And it's just as guaranteed as the medical insurance, but they know they're not getting as good of a picture of your health, so they charge more for it. So that same policy is going to be more expensive with a non-medical company. So you always want to shoot for the best price first, and then if you can't get it, that's when I would suggest to go for a no medical route. Or if you're going for the best route or going for the best price, and then they say, oh, you know what, because of your history, because of your medical history, we're actually going to need to have a blood sample, and you're just like, no way, I don't do needles, not for me. Then you can go to no medical insurance. So if you're willing to pay a little bit more, you can get coverage that's just as guaranteed with guaranteed no medical tests. So that being said, I'd even say try the good stuff, the low rate stuff. And if they say you need a medical test, that can be your time where you're like, okay, I'm out. But you can always test the waters. There's no black mark on your record. There's nothing that says, oh, you've applied here before, so we're not going to insure you. You don't have to worry about some sort of permanent record that's going to ruin you. You can always just shoot for the best you can, the best rate. And then if you can't get it or don't want to complete the journey, you can always go to the non-medical one and just pay a bit more for that same coverage.
Okay, thanks, Tobin. And yeah, I want to dive into one thing you said specifically here at the beginning, just to make sure all our participants know. So you use the term fully underwritten or underwritten. I know we've bounced that term around a little bit, but what does that mean?
I'm so glad you brought that up. So that's right. So fully underwritten insurance, when I mentioned that before, what I mean is that all of the qualifications, the questions, whatever they needed to approve you was done up front. So you didn't have the policy until you qualified for it. And once fully underwritten policy is issued, it's guaranteed. The life insurance company cannot go back on its word. So that's why they're careful at the application step, because once it's issued, it's out. They have to pay that claim now. And so that's what you always want to get is fully underwritten, because then you know it's guaranteed. As long as everything was answered truthfully, that payout is going to happen. There's no way they can get around it. If it's not fully underwritten, it means that they still reserve the right to go check out your file and go through it and make sure all the T's were crossed and all the I's were dotted. And even with the tiniest mistake, they could say, oh, you know what, we can't pay the claim. You had this condition back then. We didn't ask about it, but we wouldn't have insured you if we knew about that. So we're just going to return all the premiums you've paid instead of paying out the claim. And so one great example of not fully underwritten insurance is mortgage insurance. So they perform what's called post-claim underwriting, which is sort of what I just described, where you kind of put the piece of paper in front of you of you got the mortgage, here's the coverage, sign here, and you've got it. And they don't really ask many medical questions. You didn't have to go through anything, and you feel like you're covered. And until there's a claim, if somebody passes away, now they'll go through your medical records and see, did you ever qualify for this to begin with? So that's sort of a really big thing that you don't want to have for life insurance, because I wouldn't feel comfortable at night knowing that there's a chance if I jump out of this airplane, there's a chance this parachute isn't going to open. I want the guaranteed parachute that when I come out of that plane. So fully underwritten is super important in the life insurance world, because it means your policy was all checked out before it was given to you and all approved, thumbs up, you're guaranteed, and now you've got it. So always look for fully underwritten term insurance whenever you're shopping around. If they don't know what that is, or if they can't answer that, then for sure be very, very careful, because if it's not fully underwritten, it's not guaranteed.
Thanks, Tobin. Yeah, that was actually one of our questions that came in. So someone was wondering, are there any instances where your policy wouldn't pay out? So covering that, making sure you get fully underwritten term insurance so that's guaranteed. That's great to know. And then are there any other exclusions we should be aware of in a policy?
Yes. So there's one important exclusion in every life insurance policy in all of Canada. And that is there's no payout for suicide in the first 2 years of the policy. Every insurance company I've ever seen shares this exclusion. That's the only exclusion on our policies and with most life insurance policies. So every other cause of death is covered. The only thing is if there is a suicide in the first 2 years, what they do is they void the policy and return all premiums paid. So it's as if the thing never happened. So even in that situation, the money isn't lost, it's just returned. But that's the one exclusion to be aware of. Other than that, every cause of death is covered.
We did have some viewers who submitted questions before ahead of time, so we'll kind of dive into that right now. So our first question was, does the premium stay the same for the whole term, or can it increase or decrease? Laura, do you want to take that?
Yeah, of course. So for most, I would say almost all term insurance products in Canada, include our own, you're looking at a flat premium for the entire policy length. So you're not going to have to worry about your premium increasing over time for that guaranteed policy length that you've purchased with your term insurance coverage. So every time you buy a policy, there's kind of two inputs: a coverage amount, that's the death benefit payout, and a policy length, that's the length of time that you'll be covered for. Your premiums will stay flat for that length of time. There are a few policies that I've heard of where you do see an annual increase. Just look out for that in the policy contract and the policy terms. And in that case, it's a little bit more complicated to compare premiums apples to apples, because with one, you're paying that premium for the rest of your life. With another, you're signing up to have your premium increase every year. So if you see something really low in the market or significantly different than all the other insurance company monthly premiums, you may want to dig into that a little bit further.
So after you start your coverage and you get your policy, if you have financial difficulties, are there any options available for that? Is that a common occurrence that happens? Can you just dive into that?
Yeah, you do have a couple options. It's not perfect. I'll say that just to be completely transparent. I think the biggest levers you have to pull is actually to decrease your coverage amount or policy length. So say you have $1 million policy and it's $50 a month, and that's pretty tight. What you can do is maybe look at $200,000 or $300,000 of coverage instead, looking at that maybe $17, $20 a month range. And so you do have that option. You don't need to go through any hoops there. You don't need to be re-underwritten. It's no big issue to decrease your coverage amount. The other option, if you do lapse your policy, meaning that you can no longer pay the premiums, and say you lost your job and there's a couple months there where you're just you're obviously the budget is very tight and you're not able to pay your premiums. Insurance companies do give you the option to reinstate your policy within 6 months. It depends by insurance company, but it's typically somewhere from the 6 months to 2 year time frame where you can go back to your insurance company and basically pay all outstanding premiums in order to reinstate your policy. The rules are different by insurance company, so it's definitely not guaranteed that you won't be re-underwritten. So I wouldn't, there is a case that say your policy lapses and then your health changes and then you want to reinstate your premiums. You may not get away with just keeping the same price at that point, but there are a few fail-safe kind of type options to make sure you can get that policy back, or to, decrease your premiums to a point that's a little more affordable.
Okay, thanks, Laura. So we had another question come in. So does PolicyMe offer joint first to die policies? Why or why not?
Yeah, I can take that one. It's not something we're offering today. When you look at the price of those policies, they're not that much different than two individual prices. So if you and your partner need insurance and you want to get a first to die policy, it's not that much cheaper than just getting two individual policies for the two of you. It also is, it complicates things in the back end, where if your partner dies and you still want the coverage, you may not be able to keep it anymore. By definition, it's a first to die policy. So just not something that we found many customers asked for, and therefore it wasn't one of the first products that we brought onto our new platform.
Okay,
I don't know,
Cool.
Tobin, if you have thoughts on those
Yeah.
policies as well.
Yeah, I'm not a big fan of joint first to die policies for the same reason you just said. It kind of complicates things. Just you have to really look at the wording of the contract of what happens when one person passes away. Can you keep it? And if you're talking about a situation where you have kids involved, you really want to guarantee a double payout. If both parents are gone, that child's going to need more money than if just one was gone. So if you had two separate policies, that's going to pay out twice guaranteed. When it's a joint first to die, it's not so clear. And with the cost savings being so low, you would expect to save more, I guess, is my main thought on joint life insurance, is that you would expect the price to be lower, but it really isn't that much lower. You maybe save $1 a month than just two individual policies. And so just from that perspective, it's not worth the savings for what you could possibly be giving up for it. So it wasn't really a priority for us.
Okay, another question is, what if I want to increase the coverage while I'm paying my premium? So I guess another option is like, is the coverage or term length flexible if you've already started a policy?
Yeah, I can take that one. So yeah, you do have the option in the first 5 years to change your policy length, increase it. So if you bought a 10-year policy contract, you can then within 5 years adjust it to like a 15-year contract or a 20-year contract, 25-year contract.
Yeah, and this is not exactly related, but I don't know if you, Laura, want to speak about the 30-day like trial that we have at PolicyMe.
Yeah. I wouldn't say this is unique to us because this is pretty common on all term life insurance policies on Canada, but there's a 30-day free look. So if you purchase the policy and put your coverage into effect, and then within 30 days decide to cancel, we'll return that first premium that was paid to you. So, it's a bit of a 30-day cancellation clause, similar to what you'd have with a lot of kind of retail products.
Yeah, it's nice to know you have a little time to think about it, I guess. Okay, another question is, do we have a war and terror clause in our policies?
No, we do not.
Okay. And then another question is, who is the insurer for the PolicyMe administered policies? And I guess like, what is their rating in Canada, and will they be there for the policy length? Is that something you have to worry about, that the company will be there to pay out?
Yeah, so we partner with Canadian Premier. You can find a bunch of information about them in our learning center. So if you actually go to policyme.com and on the top nav bar, click Learning Center and about PolicyMe, you can go in and kind of read a little bit about Canadian Premier. I don't want to misspeak here and say the wrong date that they were founded or their rating, because I actually don't know that on top of my head. But what I can guarantee is they've been around for a very long time. They are a great partner of ours, and certainly you have nothing to fear about in terms of them not being around if ever you need to claim in 20 years. There's a few other fail safes there as well. We reinsure our policies with a big reinsurance company. Again, these are the type of companies that have been around for hundreds of years and are well capitalized. So again, not any risk of them going under. And then Tobin can also probably talk to you about Assurus as well, which is another fail safe, even above those two things, that can guarantee your payout if anything were to happen to either of those companies.
Yes, for sure. And just to give a bit of background on how it works, even if you go with any other company, they never hold on to the whole policy. Behind the scenes, they're kind of splitting it out of like, this big company that backs us is going to take this much. This big reinsurance company, as Laura mentioned, is going to take this much. So we do the same thing as all the big companies. And so the ones actually taking the risk are those huge, there's only a few of them in Canada, huge companies that insure, they'll be covering all the same policies that you'll see from any other company. And just a little bit more info on Canadian Premier Life is that you may recognize the name Securian Financial. They're actually the subsidiary of Securion, and they're actually one of the biggest and most reputable insurance companies in North America, who currently they've got 1.4 trillion of life insurance in force at least as of the end of 2020. So it's a huge companies we're talking about. And now that I've said that, what was your question again, Laura?
Oh yeah, you knew the stats, so that's great. Oh, I was saying Assurus, which is the backstop in Canada as
Oh,
well.
yes.
Yeah.
So, of course, because there could be concerns, with a new company such as ourselves of what does happen. Say, if, the worst happens down the road and we go out of business, is your policy still there? Like, what's going on with that? So the short answer is yes. What happens in Canada is anytime a life insurance company has ever gone under or just decide to exit the business, their policies have been purchased from existing life insurance companies. So for example, there's lots of companies like Clarica, Empire Life, that now if you go and call your policy or your contact, if you have those policies, you'll find those are Sun Life, though that Clarica doesn't exist anymore, and neither does Empire Life. And so policies pretty much get purchased by other companies that guarantee that. So the highest percent chance of what would happen if we were no longer around is that another company would now administer that policy and guarantee it. And if for any reason that didn't happen, if no other company purchased it, then the government of Canada through Assurus does guarantee 80% of the death benefit of the policy at minimum. So they'll try and get the whole amount, but if they can't, at least 80% of the death benefit will be guaranteed. So if you have $1 million, 800,000 will be guaranteed. So we have first companies in the market usually purchase life insurance policies and guarantee them. The second fail-safe is Government of Canada will step in and guarantee the policies if no other company buys them.
Yeah, and to be clear, the bet you're making is on Canadian Premier, again, owned by Securian. So it's not whether PolicyMe is no longer around, it's whether Canadian Premier and Securian are no longer around, and they are very reputable companies who have been around for a very long time. So the summary is that there's not much risk there. These companies are well established, and there are fail safes if anything were to happen to them as well.
Yeah, and the policies are just as guaranteed as any other policy. It's the same chance of a claim denial happening, which doesn't really happen in fully underwritten term insurance.
Okay, yeah, that's great to know. I think especially because life insurance, we want to get it for our loved ones. So at the end of the day, we want to make sure if we're not here, something would be there to protect them. Okay, so we got another question. Is there a renewal option at the end of the initial term?
I can take that one. So there's not PolicyMe's policies. Few things here. One is renewal premiums on life insurance policies are extremely expensive. You're talking about like 10 times the monthly premium there. So and what is very common is auto renewal. So what will happen, you buy a 10-year policy, you're paying $30 a month. All of a sudden, the 10 years goes by, and the first month, you're getting hit with those renewal costs, and they're extremely expensive. It takes you a few months to even find out that the premiums have gone up that long. It takes you even longer to get in touch with the insurance company to find out why they've gone up and how to adjust them. And what they're going to tell you is there's nothing you can do at this point. Like, you've opted into those renewal costs. You need to cancel the policy and start fresh and get a new one. So when we were designing our product, decided that was like one of the biggest kind of complaints by our customers was these auto renewal premiums, and we've removed them. It's something that we're still kind of reaching out to our customers, making sure it's the right move to remove it from our product. But we definitely thought that was like an added benefit to make sure that people weren't getting kind of hit with these incredible costs at the end of their term.
Yeah, everybody who's had an auto renewing policy has come to us and said, do not put that on my policy. I do not want a policy that auto renews. And we're like, sorry, that's kind of all that's here in Canada is policies that auto renew. And even if I can be like crazy transparent here, it actually brings down the premium to add on an auto renewal onto the policy. So you'd think that taking off this feature, it would cost money to add this feature. You'd probably pay more for it. It's actually not true, because life insurance companies make a lot of money from renewals from all the people who forget, and they all of a sudden $500 comes out of their bank account. They're never going to get it back. That life insurance company is not going to return it. and they're angry, like, I could have just applied for a new policy for $50 a month. Like, why would you just jack it up 10 times on my existing policy? And they rake in a lot of money from these auto renewals. And so it seems like it's like pitched as a really good thing, but in practice, in reality, it actually harms so many more people than it helps.
And also, I just want to say that when you apply with PolicyMe, even before you apply, like let's say you just got a quote from us, you can view a sample policy. So you can see like every single clause, every single detail. So it's all there for you to view the entire document. So we want to be as transparent as possible. So that's there for your learning and for your education. Okay, next question. What medical questions do underwriters ask?
So if you want to test it out, you can go to policyme.com and just go through the medical questions anonymously or using your information. But it's pretty comprehensive. I will warn you, and that's why we do not say that it'll take a few minutes. Like for the average person, I think you're committing to about a 10 to 15 minute process to get through them. The main categories are anything related to family history. So an immediate family, so your parents, your siblings, they'll want to ask if there was any serious conditions that they face, typically before the age of 60. And then they'll be asking about your history. And this goes back many years. So it's not just like your medical history in the last year. They'll want to look back as long as like 10 years or longer. Ask you questions about whether you've had any major diagnoses, major surgeries, major complications, and if for anything that you disclose, there'll probably be a subset of follow-up questions. When did that occur? What were the symptoms? What was the treatment plan? Has that been resolved? Is there ongoing complications related to that disclosure? So it's pretty comprehensive, but as Tobin said, it's almost great to disclose things at that level because you can be confident that that's all on your record. It has been reviewed by an underwriter and they've approved you regardless. So once you get that approval, you can be confident that that is based on kind of your whole medical history. So what possibly could come up as part of a claims process that would surprise them? I don't think much at that point.
Yeah, and I just want to add a little thing here is when you apply with PolicyMe, we're asking you all these questions like in the 10 to 15 minute application process. And if you were to go with another company, they would ask you these anyways, but it would be at like a later time, or you would need to go in for a medical or have a nurse come and then they would ask you. So it's kind of all the same, basically making sure that your policy is fully underwritten through that. Okay, the other question is, would you envision that there will be more policy options, coverage terms, and links available through PolicyMe anytime soon? What about critical illness or participating whole life?
I can take that one. Yeah, so I would say the whole life, probably not. It goes against our philosophy. We are very much like a term life insurance company. We believe in that product. We have a lot of issues with permanent products. We strongly think that like investment and insurance should be kept separate. They should not be coupled together because it's a very expensive way to invest your money. And so I don't envision participating whole life products. Critical illness, though, is a different story. That one is interesting. It's something we definitely foresee adding to our platform, but we, even with the insurance policy, we spent a lot of time making sure that there was like no fine print and that everything in the policy contract was like easy to read and easy to understand. We took what typically can be a 50 to 60 page legal lease type document and policy contract and brought it down to 10 pages. We didn't hide anything. We spent a lot of time kind of looking at the exact words that we used in policy contract to make sure that it like was legible and it was just really easy to digest. Critical illness is one of those products that can get pretty complicated pretty quickly, because you're looking at certain conditions, and the definitions of those conditions might have to be written out in a bit of legalese to make sure like it's clear what is covered and isn't covered. And so we just want to spend our time with it to make sure we can offer similar features and values to that application process related to kind of like a simple product contract or a policy contract and easy to understand definitions. And so I just think it'll take a little bit longer to get there, but it's something we've definitely envisioned adding to our platform.
Okay. I don't see any more questions, but yeah, I think we're getting near our time limit. But if you guys have any questions, type them, raise your hand, just let us know. We're really happy to answer them for you. But I guess on that note, are there any last minute things you want to say, Laura or Tobin?
Yeah, just definitely if you think that you need life insurance, go make sure you're looking at it sooner rather than later. There's nothing worse when we hear stories of people who kind of have been thinking about it for some time and then unfortunately have some sort of medical diagnosis that can make it very difficult for them to be eligible for life insurance. So if you need it and you're young, that's when it's at its cheapest and most affordable, and kind of will be the simplest process to get, and you won't have to worry about being uninsured later. We offer a lot of resources online that are totally free, so feel free to go online and look those up.
Absolutely. I totally agree. Life insurance is one of those things that's so easy to go on the back burner.
Yeah.
It's just, you're like, oh, I need it. Like, let's do this. And then all of a sudden you find yourself 6 months, a year later, and you're like, oh yeah, I was going to get life insurance. And so, too often it happens when somebody needs life insurance and they're like, oh, well, like, I did have a heart attack last year. And it's like, actually, like, it's going to take some time before they'll consider you. And so anybody who's coming who needs it, it's kind of too late. You have to get it with your health when you're healthy. And that's like the biggest thing we can drive home, is that health buys life insurance, not money. No matter how much money you've got, you can't buy it if you don't qualify for it. And so if you need it, the sooner the better, and then you don't have to worry about it anymore. And always get quotes. Don't just choose one company, just go with it. Look around, see what's out there. Feel comfortable with what you're buying, because these are long-term plans. These are things that you expect to have in place for 10, 20 years. And if they're used, they're going to be huge game changers for your family. So you want to make sure you're getting the right plan. So for something so important, take your time and find the right thing for you. And we're happy to help along the way. Use a recommendation engine, call in. We're happy to help.
Yeah, and just one small last thing to add there. The reason it's also important to get life insurance sooner rather than later is, one, because your premiums or your prices will increase the older you get. So it's better to do it now than wait like a few years and just let it slip away. Yeah,
That's right.
Yes. But yeah, so if you have any questions, type them into the chat. Or as Laura and Tobin said, you can go to our website, PolicyMe.com, check it out, get quotes.
I see one question in the Q&A. I can answer it really quickly, and because it's an easy one. So it says, what if I want to increase the coverage while paying premiums? So there's a big anti-selection risk there, and that's what insurance companies are worried about. So you'll get a $200,000 policy, and then all of a sudden someone has some scary health diagnosis and they want to increase their policy to $2 million. And so what they make you do in order to combat that risk is to get re-underwritten. So typically, if you're adjusting your premiums by a lot, it's best just to kind of apply for a new policy for that top up. You shouldn't really get rid of your original policy because you've locked in low rates because you've bought it in the past. But for that gap where you're looking to increase it, typically it's no different if you go through the insurance company to apply for a change request versus just like reapplying, because they're going to go through a full underwriting process with you again. Yeah.
Okay, great to know. Okay. Well, yeah, I guess that's it for our webinar. Thank you all for joining. And yeah, I'll just repeat it. If you have any questions, just feel free to email us, check out our website, contact us through there. But yes, thank you all for attending, and we hope this was educational and informative.
Thank you.
Thanks.
Bye.
Bye.